Hello, everyone. I am pleased to welcome you all to the fifth edition of FinTalk's Fanatics flagship guest lecture series, FinTalk 5.0. Now, moving on to the main session, we have Mr. Binod Shankar with us. He's a platform speaker, an executive coach, a regular blogger, a market analyst on CNBC and Bloomberg, and the host of Real Finance podcast. The podcast is as real as it gets. Sir is also chartered accountant and a CFA charter holder and has obtained the level 7 qualification in coaching and mentoring from ILM, which is the UK body. Talking about his past experiences, he started his career as an industrial banker. And after 17 years in corporate, Binod quit his executive director job at a listed asset manager to co-found Genesis Institute, which was later acquired by Kaplan. Binod sir is also an endurance athlete, and he specializes in long distance running, high altitude hiking, mountaineering, and long distance and high altitude cycling. Now I would like to invite him to the stage and kick off the session. Welcome, sir.
Thank you, Abhijit. Thank you, everyone. Very good evening to everyone. And thanks to FinTalk 5.0 and Finance Club at IIM Raipur. It's been quite fun interacting with all the organizers of this event over the last few weeks. And it's my pleasure and privilege to speak about careers in finance and employability today. As Abhijit mentioned in his opening remarks, please keep the questions coming as I'm speaking. No need to wait till the Q&A, which there will be a Q&A towards the end, 15-20 minutes. So if you have any query, please post on the chat box in Zoom or just raise your hands. And I'll be glad to answer your questions while the presentation is going on. So please don't be shy. And just in case you're shy, the FinTalk guys will kick off the questions anyway, so that everything is fine. I'm going to share my screen now, and let's start off, right? Abhijit, can you see the screen?
Yes, sir, we can see the screen.
Brilliant. Let's start off. So as Abhijit mentioned, my name is Binod Shankar. I'm a chartered accountant and a CFA charter holder. And today I thought I'll talk to you about something quite important since you're about to enter the workplace, about careers in finance. And specifically, I wanted to talk about investment banking, which is a huge area, investment management, employability, which is all about not the technical side, not the qualification side, but what do you need to do to succeed in the very competitive career space out there. And of course, we'll have a Q&A as well. Now, as Abhijit mentioned in his introduction, I've had quite a varied life in work, right? Ever since I qualified in 1992, I know that makes me quite old, right, as a chartered accountant. And spent quite a lot of time in corporate, Ernst & Young, KPMG, Arthur Andersen, with a big property developer in Dubai. I quit that, started entrepreneurship, spent about 9 years building the company from scratch. The company was acquired by a multi-billion-dollar US education publishing giant called Kaplan, the guys who make all the books for GMAT and ACCA and CFA and CP and things like that, right? And since then, last 3-4 years, I've been investing, podcasting. I appear quite frequently on CNBC and Bloomberg. And of course, I also talk to university students and MBA students as well. So that's my background. So I speak with a lot of experience and insight and expertise on not just careers, but entrepreneurship. And if anyone wants to question me about mountaineering and cycling and hiking, we can talk about that as well, if time permits, right? So let's start with investment banking, because everyone's heard about that, right? Investment banking, quite a big lucrative area, but what is it really? And that's the format I'm going to follow. What is it? What are the criteria required to crack investment banking? What are the skills required? What are the pros and cons of this career, right? And I'll be quite realistic with you. Like Abhijit mentioned in introduction, I don't pull any punches, and I call a spade a spade. So you'll get the real talk from me as we go along, right? So investment banking is quite misleading term. It's not really banking, right? Where people give loans and accept deposits. It's basically like a middleman's job. investment bank introduces buyers and sellers of companies and tries to make a deal happen. That deal could be an IPO, a private placement of debt or equity, a merger or an acquisition or restructuring or something like that, right? That's what investment bankers do. So they don't put money on the table, right? They're very smart chaps. They don't risk their own capital. They basically sell their time, and they charge a lot for their time, right? They get paid very well for that. Now, so their role is part sales, part advice, bit of negotiation and deal making. And a lot of people go to investment banking for the money. I'll be very honest with you, right? Because even at the mid-level of investment banking, you'll be probably the top 1% of income earners in finance, right? In that location. So it's quite, money is a big draw. Some people also go because of the excitement of deals and, talking to CEOs and CIOs and CFOs and all this business travel and 5-star hotels and exciting deadlines and company meetings, right? Some people love the deal mechanics as well. What I mean by deal mechanics, the structuring of a deal, right? The valuation of a company. That is quite exciting for the technically minded people. That's what, in a nutshell, what investment banking is about, right? So who are the big players in investment banking? Well, depends on the location, but globally, and probably in India as well, the big boys are mostly a bunch of US and a few European banks. So JP Morgan, Citi, Goldman, BofA, Morgan Stanley are all from the US, and Barclays, Credit Suisse, and Deutsche Bank, all European. And they pretty much rule the roost when it comes to investment banking. Of course, lots of smaller boutique names, right? You'll find everywhere. And they also do well in their own small niche. So those are the big boys. And I'm sure you heard this name before, right? Nothing new. Now the question is, so what does it take to crack investment banking, right? How do you enter this field of investment banking, right? Now, I got to warn you about this, right? They're long grinding hours, which means you have to be quite competitive and the A-type personality, right? Willing to work those hours. Okay, that's number one, right? And it's very important to understand that, because I always say that one reason why people are miserable at work or disengaged at work, right, the least, is because their personality doesn't match the job. And so you've got to be very careful what you're getting into. Hence why I'm laying it out for you. So this is one requirement, right? Grinding hours. Extremely attentive to detail, because you're not just preparing valuation models, you're also preparing PowerPoint slides for the client and for road shows and things like that. That's got to be quite, you've got to be quite picky about detail, right? Most of you guys, or a lot of you guys, from what I've understood, have engineering background. So you won't have an issue with mathematics, right? You also need to be pretty good in reading and writing business technical English to an audience that is quite sophisticated. That's basically, you're talking to other investment bankers, lawyers, CFOs, CEOs, other board level executives, right? And you are interested in deals rather than just simply following markets, right? That's kind of one of the requirements that comes if you want to become an investment banker. And of course, a thick skin, right? If you're one of the sensitive, delicate types, who gets hurt by criticism, then don't go into investment banking. That's quite a tough place to be, right? So how do you enter investment banking? How do you get into IB, right? That's the requirements they talked about. Well, if you're from top university like Ivy League or Cambridge or Oxford, yeah, of course, you get a straight pass, right? Some other people I know, youngsters I know, they get into investment banking through an internship, either during undergrad or they intern at an investment bank. And then after the internship at investment bank, they come back and get a full-time offer from the investment bank, right? So that's the perfect way, because you go to investment bank, you work with them for 3 to 6 months, summer internship, they like you, you impress the big bosses. And then by the time, before you come out of your year 2, you've already got an offer. The other way that people get into investment banking is you work full-time in something like a big four firm, right? Like Ernst & Young, PwC, KPMG, or Deloitte. And you work in valuations or deals or advisory. So that gives you some sort of experience when you go into investment banking. And of course, MBA campus interviews, very, very popular. Masters or MBAs from top business schools. In India, of course, the names are quite familiar. So these are like the 4 ways in which you break into investment banking, right? Either you fresh graduate from a top university or internship at IB, again, probably after coming through a top university. Or you graduate, you work for a few years, and then you get into investment banking after going through a Big 4 or MBA, right? Yes, these are all tried and tested routes for getting into investment banking. Any questions so far? You guys have been pretty quiet. Any queries? Anything that struck your interest?
I don't see any questions on the chat box right now.
Okay. Right. Okay.
I'll let you know when I see that.
Do let me know. Yeah. Thanks.
Sure.
Continue.
Yeah.
And then, of course, I did say I'll talk about what the work is like. I mean, so I did mention that what is investment banking, right? So we said it's deals and acting as a middleman and all those kind of things, right? So let's get into the work. And this is very important to understand the nature of the work. The nature of the work is basically approximately 50% preparing presentations, pitch books, right? Offer circulars, things like that, investor presentations, right? And what are you trying to do is you're preparing presentations to pitch to potential clients to win deals. So you might go along with 5 other firms and pitch a company or a deal to a client. And then the client, there's a beauty contest, not a literal beauty contest. And then he picks an investment bank to help him sell the company or buy a company or whatever. So presentation is very important. So your PowerPoint skills have to be top-notch, right? Your presentation skills have to be top-notch. You'll get some random administrative tasks, especially if you're a junior, right? If you go in as a junior, you would probably be told to do some normal admin work, routine work that's not technical at all. That could be up to 30% of what you do every day, right? At an investment bank. And modeling and valuation is about 20%. And this is technical, right? So I don't know how many of you actually know financial modeling and or equity valuation. Can you post in the chat box? And Abhijit, can you read out the responses?
Yes, sure. So people know about it, then maybe you can type in the chat box.
Yeah, anyone, how good is your knowledge in advanced Excel and financial modeling?
Or if you don't, you can just type in no.
Are you good, bad, or ugly? Is what I wanted to know. The reason I asked that is because this is a critical skill.
So some people are not aware about it and some are beginners.
Okay, that's fine.
Right.
That's fine. That's fine. Thanks for reading it out, Abhijit. Now, this is important because when you first enter investment bank, guys, you'll be told to prepare models because the guys above you, the VPs, the AVPs, the managing directors, they don't have time to prepare models or presentations. You'll be doing all the grunt work. So you must know how, you must know 2 things, right? Or 3 things really. You must know advanced Excel because that's what is very useful in financial modeling. You must know about financial modeling itself, which of course is based on Excel, but financial modeling processes and practices are different. And you need to learn to, the third part, you need to learn to apply financial modeling in specific business situations, one of which is valuation. So there's a lot of other situations. There's cash flow forecasting, there's valuations, there is M&A modeling, there is LBO, leverage buyout modeling. These are all different applications of financial modeling, which is based on the tool called Excel. So I would strongly suggest, I think someone asked me before this presentation as to what would I tell people to acquire skills. One would be definitely Excel and financial modeling. It'll be hugely helpful to you. Because even if you go to interviews at the investment bank, one of the first things they'll ask you is, here's a case study, here's a valuation, value the company and write a report and give it to me in the next 6 hours or next day. So it's quite helpful. So that is pretty much what you end up doing on a daily basis in investment bank, right? In less technical areas like equity capital markets, you spend even less time on Excel, probably more time on presentations and PowerPoints and things like that, right? Of course, this percentage is a very approximate, right? So don't hold me to it. So this is what you do. In more technical areas like restructuring, which is quite complex, you spend a lot more time on technical tasks like valuations, like looking at individual companies, financial analysis. That's another thing I would urge you to be quite focused on, right? Try and understand the basics of financial statements and financial reporting, because that's all linked. Investment banking, valuations, financial statements are very much linked together. I know most of you probably hate accounting, and the very word of debits and credits probably freaks you out, but accounting is the grammar of business, and you need to understand that, right? And of course, financial analysis is very important. I'm of course a bit biased because I'm a financial analyst, and I love that area. Right, let's talk about the pros and cons of investment banking, right? Before we move on to investment management. The pros and cons, right? And I'm going to be quite blunt here. This is what I think are the pros and cons, right? On the pros side, you end up becoming a better communicator because you get so good at PowerPoint and at presentation. Your confidence level goes up, your language skill goes up, a lot of things improve. That's fantastic, okay? Because when you're in college, you have not much opportunity to learn that. Number two, maybe I should put that as number one, right? You earn a lot of money, much more than in a lot of other areas. So I'm not sure about the India pay packets, but I do know in the US, the starting pay in investment banking for an MBA graduate from a top 10 business school probably would be somewhere around $125,000 to $150,000 per year, right? Wall Street, typically. I know quite a few of my former Cfhr students who are right now in Wall Street. They're in investment banking. So it's a lot of money at that young age, right? Third point is you develop a good network because you meet so many clients, you meet lawyers, you meet a lot of other professionals, you meet senior people at clients. That's very important because for your network, you need to have that connections with people who can influence or take decisions, right? Number four, which is linked to number three, is you have access to great exits, right? So quite a few people I know who work in investment banking for 3, 5, 7 years, they quit IB and then join a client, right? So you might be working at, say, Morgan Stanley, but your client might be Amazon or IBM or Google. Then after 5, 7 years, they might hire you as a deals manager or something like that, right? Number five, the fifth advantage I see here, investment banking, is you learn to work under huge pressure. Because, I mean, I won't kid you, the hours are terrible sometimes. Like I know people who've worked in the city in London, this Indian lady, and she had to work like 70-hour weeks and maybe four hours of sleep on average every day, and a lot of flights and a lot of deadlines and presentations. So it's massive amount of pressure, but you learn to work under pressure, which is very important as you go up the corporate ladder. So overall, I would say short-term pain and long-term gain. And you probably heard the saying, right? No pain, no gain. That's the pros of investment banking. The cons of investment banking I've already talked about early in slides as well, right? It's boring sometimes. A lot of the time is spent in admin work or updating presentations or giving some market updates. The working hours are terrible sometimes, like I mentioned. A lot of travel, unless you love a lot of travel and love terrible working hours, right? One thing about investment banking is because you're always selling, right? You're selling your services. That's why you call it sell side. You're selling your services to clients and pitching to clients constantly. There's a lot of presentations and pitches that you would make that never happen. The strike rate can be about 10% or 20%. That means 8 out of 10 deals that you pitch for never happen. It goes to some other firm. Right? The other two cons or disadvantages of investment banking are low job security, because it's capital markets, and if markets are good, then investment banking work is great. Because when stock prices go up, companies want to buy other companies or sell their companies, right? Mergers, acquisitions, it's fantastic. But when the markets are down, then suddenly you become a high cost or overhead to the bank, and you get fired sometimes. So, yeah, you make a lot of money, but then you can also be out very soon. And in some cases, some places, not all, by the way, some places are toxic workplaces, by which I mean not just extremely long hours, but also bosses who are jerks and uncooperative colleagues and clients who are not very helpful either. So this is what I've observed by talking to a lot of investment bankers and observing what they do, are the pros and cons of investment banking. Sorry, Abhijit, go on.
Yes, sir. So we have a question on chat.
Yeah.
It's what's the difference between sell side and buy side of IB, investment banking?
Right. So investment banking is, and who asked the question so that I may know the name?
It's Sudhar.
Sudhar. So yeah, good question. So investment banking is sell side. So brokerage, investment banking, they all call sell side because you're selling your services. Buy side is when you are with a company that buys securities or investments. So mutual funds, hedge funds, all these funds, pension funds, family offices, these are all buy side, right? Because they're buying securities. So you have two, you have the sell side and the buy side, and they work together a lot of the time, right? So a pension fund or a big hedge fund might actually work with the investment bank on a deal that the investment bank is selling to the pension fund. So it's a buy side and sell side. So for example, Cfhr charter holders, asset management actually is buy side. Investment management is buy side. And investment banking is sell side. Sudhar, is that clear?
Yes, sir. Thank you.
Brilliant.
So there's actually a question on books, but I think you have included that in your slides. So
yeah. I'll definitely talk about books before I wrap up today. Yes. And we can come to that, right? So that's my spiel on IB, investment banks. Any questions on what we've covered so far before I move on to the second area for today?
No, sir. There were two questions. One you have answered and one we'll actually eventually answer.
Brilliant. Second area is investment management, also called asset management, and many names to it. Right? This is a massive, massive industry. We're looking at probably, I don't know, 30, 40 trillion US dollars a year, right? Now, what do these guys do and what is it really? This is something I'm very familiar with because as a CFA charter holder, this is the industry that most CFA charter holders work in. So what is it? OPM, has anyone heard the term OPM? Other people's money, okay? Now that's a new acronym you learned today. Basically, you manage, you advise other people's money. So what does that mean? That means that your clients are either individuals who have a lot of money, like what you call high net worth individuals or ultra high net worth individuals, those guys with $5 million and above. Or institutional, which means your clients are colleges, endowments, insurance companies, pension funds, and even governments, right? Whose money you manage or who you advise on how to manage their money, right? So they also call fund managers, asset managers, a lot of names given to them, right? But the whole overall area is called investment management. Now, this is technical, right? Unlike investment banking, if you notice, right? Unlike investment banking, which is not that technical. A lot of work is, selling and negotiation and things like that, right? Presenting and all those things. Here, it is far more technical, which means you would do a lot of financial analysis. You would help in portfolio allocation between, say, bonds and equities and property and things like that. Well, one big role of investment managers is equity research. So you'll find a lot of equity research guys in investment management. What do these guys do? They basically issue buy and sell recommendations or hold recommendations on stocks. You see them all the time on Wall Street, on Dalal Street, etc., right? So this is what basically they do. And the terms asset management, wealth management, investment research are all part of what we call investment management. Asset management is when you manage the assets, the financial assets of a company. Wealth management is when you manage the financial assets of an individual, his wealth. And investment research is what you use for both, basically to do research to help your clients make money. And that's pretty much it, right? So this is what you call buy side, to answer Sudham's question, right? This is the buy side. It's far more complex, far more fundamental related to financial statements. And this is what a lot of funds do, right? So who are the players here? The players, of course, like I said, it's a multi-trillion-dollar industry. It's massive and it's growing every year. Okay? The biggest players are hedge funds. And what hedge fund, when I say hedge funds, we're talking about companies that are not that regulated or not that transparent. These are funds that manage the money of high net worth individuals. The biggest names are mentioned here. The private equity funds are funds that invest in companies that haven't gone public yet, smaller companies, and they hope to make them go public. And they make a lot of money. So imagine if you bought Facebook way back in late 90s, right? And it went public in 2004. How much money you would have made for your clients? That's what private equity funds do, right? And a lot of them, for example, in India, you have these unicorns, right? Coming out, the $1 billion companies, right? A lot of private equity guys have invested those unicorns. Now, when they go to IPO, they'll make a killing, right? I mean, the funds and their clients. Mutual funds, you have quite a few big names, huge names in India, like HDFC and Reliance. These guys collect money from middle-class people and invest in the share market. So it's very transparent, highly regulated industry, unlike hedge funds or private equity, because they are dealing with the public's money, and the government is very interested in what they're doing with the money. Pension funds are, like the name indicates, they manage the pension money of employees of a company. So these two strange acronyms you see on screen, CASTers and CalPERS, they're the California Teachers Retirement Fund and a California Employee Retirement Fund. These are actually pension funds based in the US. They manage hundreds of billions of dollars of money belonging to government employees. Or it's like the Provident Fund kind of situation you have in India, right? They collect every month from their salaries and they invest in property, bonds, stocks, et cetera, et cetera. Very well professionally managed with lots of Cfhr charter holders, et cetera, et cetera. You have the strange creatures called sovereign wealth funds. These are funds that are not managing public money, but managing government money. So where I am based, which is UAE, you have ADIA, Abu Dhabi Investment Authority, which is one of the world's largest sovereign wealth funds that manages the Sheikh's oil money. It's probably about $600 billion. You have GIC in Singapore, PIF in Saudi Arabia, right? The biggest is the fund in Norway, interestingly enough, because Norway has lots of oil wealth. Then you have two smaller sized funds like impact funds and distressed funds, which are becoming quite popular these days because people want to make an impact in terms of sustainability and environment. And distressed funds is basically when, a company is in distress and you buy out at a cheap price and make a killing there. That's the players you see in asset management, right? Which also takes me to the other point, which is what are the requirements, right? Just like I talked about investment banking, what do you need to be or do to get into an asset manager or a pension fund or a hedge fund, right? Well, here, quite specific technical skills are required, right? Or aptitudes are required. Number one, analytical ability. What do you mean by that? Big picture skills, maths and economic skills, attention to details. So here you need to be able to model, value, forecast, analyze balance sheets, cash flows, companies, businesses. Very, very important, right? It's quite exciting as well, right? Quite rewarding intellectually as well. The second thing you need to have is broad knowledge. So it's not just enough to know finance or portfolio management or derivatives equity. The best analysts, the best managers, fund managers actually have a much more broader knowledge. Because if you know all these things I mentioned on the screen, history and economics and philosophy and science, then you're able to make a much better recommendation to the client because you have a much more holistic view of what has happened and hence what can happen. So that is quite valuable in this sector. The ability to reason, specifically separating the rubbish from the relevant. As you very well know, guys, out every day you get information from Yahoo and CNBC and Bloomberg, and there are millions of sources, right? You're constantly bombarded with news. How do you separate what is relevant from what is rubbish? How do you separate, to use what you call engineering terms, the signal from the noise? That's something that you should be able to do. And you should have a very clear thought process. So you should know that despite all the noise, this is what's really happening. And forget about what everyone else is saying, right? And of course, humility. Humility is very important because you're managing people's money, right? Or you're advising them to manage money. And you should be able to admit when you go wrong. And you do go wrong a lot of the time because the markets are not within your control, right? And you all know that. So I have made money on the markets, a lot of money on the markets over the last many years. I've also lost some money, not all my money, not a lot, but some money. And that makes me very humble as to the fact that I can't influence or control what's happening out there. So these are about 4 requirements before you get into the buy side of investment management. Right? Now, the CFA.
Sorry, sir. We had a question after the IB slide.
Right.
Is how exactly to start off with learning, modeling, or valuation? As of now, we know a little bit about statement. This question is from Harshini, and she has asked this.
Right, good question. So how to go starting? Thankfully, who is asking? Was the name Rashmi?
Harshini, sir.
Harshini, right? Harshini, that's a good question, and thankfully, there are lots of ways you can easily and conveniently and cost-effectively learn these things, right? There are lots of high-quality online financial modeling training providers, and I'm happy to post some details on the chat box towards the end. Please remind me about this, Abhijit, if you don't mind, and I'll give out some names. But yeah, you can Google and you can find out those companies, and you have some basic courses that go for like $25, $50, all the way to the Rolls Royce of financial modeling, investment banking, and presentation and interviewing and all those things, which cost like $1,500. So you have a range, right? And I'll mention those names later. But yeah, that's quite easy to learn online these days.
So also to everyone in the audience, do not hesitate in asking questions. I mean, all of us are novices, and no one is an expert except for Binod sir, maybe. So yeah, so
I'm still learning, Abhijit.
Yes, I knew you would say that.
But please raise your hands and ask questions directly. Don't be shy, right?
Yes, you can.
Otherwise, it'll just be Abhijit and myself having a conversation, which can get quite dull. Anyone else has any question? Feel free to shoot it, yeah?
We don't have a question as of now, sir. I'll inform you if anyone raises hand or chat in by chat.
Brilliant. So the screen that you have in front of you is about how to become a CFA charter holder. And the reason I put that is because CFA, or Chartered Financial Analyst, you probably heard that acronym before, right? Is the default qualification in asset management, which means that the curriculum, the structure, everything is designed to make you a portfolio manager or a CIO, chief investment officer, or an equity analyst or a bond analyst, right? So what you do is, this is what I've just explained to you, how you can get through the CFA and get the charter. It's self-study, of course, so you can pass the exams, the 3 levels of exams. I'll talk about that as well. There's a qualified work experience requirement of, I think about the three years of work experience in a particular area. You get some, after you finish the exams and you have the work experience, you need to get some 3 sponsors. So get reference letters from sponsors, your employer, current or past, yeah, and then apply to become a CFA charter holder. So there's a 4-step process to get your CFA, right? Now, I'm a CFA charter holder, so I know the process very well. I went through it myself 16 years ago. The exam consists of, the program consists of 3 levels, level 1, level 2, level 3. Okay. Now, you can see the topics on the extreme left side, and under each, you can see the exam weightage for each topic. So each exam is, by the way, it's all computer-based, by the way. It's all computer-based testing. You go to a computer-based testing center, and the exam is over in 4.5 hours. Level 1 is MCQs. Level 2 is also MCQs. And level 3 is, morning is essay, and the second half is MCQ, multiple choice. So as you can see, the extreme left side, a lot of the topics, do you cover, or do you plan to cover these topics in your PGP? Probably, yeah?
Yes, sir. I think we have already covered some of them. And I think in future semesters we'll have.
Yeah, you must have covered, or will be covering some or probably all of them, right? At some stage. So which means that if you enroll for CFA, you already know the basics, or even probably more than the basics. So it's nothing unfamiliar here. So as you see, as you go from level 1 to 2 to 3, you'll see that, it's the tools and techniques fade away. When I say tools and techniques, I'm talking about quantitative methods, economics, financial reporting, corporate finance, they become less and less. And what really dominates, if you look at the bottommost line, is portfolio management, right? Which goes from 5% in level 1 to 10% in level 2 to about 40% in level 3. So that is how it's a brilliantly structured curriculum where level 1 is all about the foundation. It's like finance 101. Level 2 is all about application, and level 3 is synthesis, where you learn to handle live cases or live cases. Right? So that's the exams in a nutshell, right? They have made it more frequent, by the way, starting this year. It used to be twice a year for level 1 and once a year for level 2 and 3. Now it's like 3 times a year now. You can write all 3 exams. So, and it's all computer based. There's no exam. There's no big exam center like they used to be before. So it's quite convenient as well. Right? Now, the occupations, right? Again, a survey was done by CFA Institute a few years ago. And about 22% of CFA charter holders end up being portfolio managers, followed by research analysts, followed by CXO. CXO could be CEO or CFO or CIO, right? And if you notice, the top 2 or even top 3 are all in buy side, mostly in the buy side, right? Asset management. So about nearly 40-50% of CFA charter holders work in the asset management side. Very few work in investment banking. So for investment banking, the default education is an MBA or a master's in finance, because those require different kind of skill sets and knowledge, right? Even a different kind of person, if you ask me, right? Whereas asset management is mostly a master's in finance, or a CFA would do as well, right? So what are some tips I can share with you? Because I used to teach CFA prep for about a decade before my company was bought by this US multinational, right? So like I said, level 1, level 2, level 3, very clearly broken out as to why they exist, right? One is knowledge, second is application, third is synthesis. Now, if you're an engineer, and I'm sure there are a lot of engineers in this group, right? Even the FinTalk 5.0 organizers, I think the bulk of them were techies. So you would love to know that there are some topics that you would immediately crack, like quantitative methods, equity valuation, and bond valuation. Quite mathematical, right? Not the kind of differential calculus or integration mathematics you guys are familiar with, but yeah, you guys have high numerical aptitude. That's quite helpful, right? In those topics, and even a few others like derivatives as well, right? Just give some examples. You might struggle in accounting because engineers love to know the why, and there's not much why in accounting, just the what, where, and how. Right? Lots of rules like IFRS and US GAAP and things like that, and not that much logical, but you'll crack it. I've taught lots of engineers in my CFA class over the last dozen years, and they've all got their charters, right? Get your accounting basics before CFA because it's quite technical. It's a lot of analysis of financial statements, which you need to do. If you're already going through accounting basics in your MBA program, that helps a lot, right? Otherwise, learning accounting, trust me, is a piece of cake compared to learning engineering or coding or whatever you learned during the 4 years in BTech, right? It's very easy. You should budget for at least 2 years of study and about 1,000 to 1,200 hours of study, right? Over the 2 years, covering all 3 levels. That's very important as well, right? And of course, it requires a lot of discipline and self-drive. Now, this is a self-study course. You don't have to go to college. There are no professors teaching you. Of course, you can go to training institutes, learn how to pass the exam. But given that you guys are already doing your MBA from a top MBA college, business school, and a lot of you have an engineering background or come from top universities, I don't think discipline and drive are a problem for you. So I think you can crack it, probably even take less than 1,000 hours to do that, right? And of course, just log on to the website, www.cfinstitute.org, and you'll get an idea of all this, what I told you, right? The courses, the type of the levels, the detail of the curriculum, everything would be there, right? And of course, I have to talk about the pros and cons, right? Just like I talked about in investment banking. What are the pros and cons of asset management career or investment management career? Well, the pros are the money is good, but not that great. You won't make anywhere as much money as you would if you were in investment banking. And that's simply because of the nature of the beast, right? In investment banking, you have huge deals you work on, and the firm takes a slice of the deals, like 1% or 4% or whatever. And the deals can be in hundreds of billions of dollars or crores of rupees. Investment management doesn't work that way. It is not deal to deal. You're managing a huge pile of money for a long time. So there's not that much margins that the asset managers make. The other pro is that it is technical and interesting. Investment banking is not that technical. As you go higher up the ranks, it's more of sales, negotiations, presentations, schmoozing clients, taking them out for expensive lunches and dinners, things like that. This is always technical because you're managing money. And that's a very complex deal, right? Especially when you're managing other people's money. The other advantage is investment management, asset management is seeing huge growth in emerging markets, especially in India and China, where you're seeing the maximum number of CFA candidates and charter holders over the last 10 years. That's very logical because emerging markets are getting more advanced. They are integrating with developed markets, and their markets are getting more transparent, more regulated, and they demand high quality professionals. So hence the demand for CFA charter holders or anyone who can manage money with expertise, right? And the big pro is less stressful and lesser hours compared to the world of investment banking, because you don't have projects, you don't have that strict deadlines, you don't have to make fancy presentations and compete with dozens of other firms and rush to finish your work. It's more long-term, more strategic. When you manage money, and you're not trading, you're not a trader, you're an investor. When you're an investor, your horizon is 3 to 5 to 7, even 10 years. Investment bankers' time horizon tend to be very short, a few months, maybe even a few weeks just to finish the deal, right? So it's less stressful, relatively, right? Everything's relative. What are the cons? Well, one big con is that a lot of the asset management is getting automated thanks to big data and artificial intelligence and machine learning. When I say automated, I mean, they don't get unemployed anytime soon. Automation is slowly starting to enter this field. I think the routine mechanical tasks will be automated, as they should be for efficiency and cost purposes. But I think as you go up, wealth managers, deal with clients, or when you have a specific skill set, you will remain valuable, and I don't think your job can be automated very easily. So, but still, it's still a risk that you should consider if you plan to go to asset management, right? The second con is something that's been happening for the last 50 years, and it will keep on, that trend will keep on happening. It's called passive investing. Now, in asset management, there is active investing and there is passive investing. Active investing is when you individually select stocks or bonds, you decide on what stock to buy and when and what price and when to sell them and why you sell them. So you basically are actively involved in asset management. So it's stock selection and timing is very important here, right? Which means you do lots of analysis to discover or find out which country, which sector, which stocks you should invest in, for example. So right now in the US, we have the Federal Reserve in tapering mode and soon lift off mode as well. So everyone's looking at financials and healthcare and energy stocks as probably where you should invest in, and not technology stocks. So this is the kind of thing you would do if you're an active investor. If you're a passive investor, sorry.
Sorry,
was there a question?
No, sir, I think there's a noise coming. I'll mute.
Okay. Okay.
Yes, sir, now it's muted.
Okay. If you're in passive investing, it's very easy. Life is a cakewalk. You simply invest in an index. What's the index? You have the Nifty index, or you could have the S&P 500 or the MSCI index or the NASDAQ, whatever. Life is easy. You just invest in the index. The index goes up, the market value of your investments go up. If they go down, the market value goes down. You only have to decide which index you're going to track and maybe rebalance once in a while. It's far less complex compared to active investing. But why I say it's a con is because it is cheaper to a client to invest passively than to give money to a fund manager and pay him some hefty fees to invest actively. And of course, clients want to save money. So there's a big trend going on globally, not so much in India, but maybe in the US and Europe, towards passive investing. Like big guys like Fidelity and Vanguard are massively involved in passive investing. The third, of course, is market risk, right? And this is, again, quite obvious. When you invest in stocks and bonds, the risk that you may not get your money back, or you'll get a very small slice of your money back. That's called market risk. Right? That's part of the job, right? It's part of the deal. And the last con, if I might call it, is related to what I said earlier. The money is good, but not as well paid as investment banking. So it's a trade-off, right? It's not like everything will be perfect. Some places you get great money, but working hours are not that good. So yeah, so pros and cons, like I said earlier. And that's my spiel on the subject of asset management. So do any of you guys have any queries on what I talked about?
So Vishaka had a question. I think she can speak and ask the question.
Shoot, Vishaka.
Sir, I had a question regarding like Indian stock market. As we see that people in India are very risk averse. They don't really like to invest their money in stock market due to the volatility we have. But so we see in other countries, people are very much into investing in stocks and everything, and even the stock market value is much more than that of India. So, sir, what would the reason be, and also how can we increase our ability to analyze a stock? Like before investing, how can we analyze if the stock is good or not?
Right. So let me start with the second question first, Vishaka. Right. The answer to that is quite long, and you can best discover that by doing a CFA course, right? But jokes apart, how do you best analyze a stock? There's a lot of process involved. It's a fundamental analysis, what you call it. So you analyze the sector, you analyze the company. When you analyze the company, and I'm of course describing it very broadly, right? Very briefly. When you analyze the company, you look at the management, you look at the financial statements, and you look at the what you call the strengths and weaknesses the company has. What we call the moat. The Morningstar calls it a moat, right? And of course, there are quite a few other factors as well. And then you value the company. And that's what a lot of people do in asset management. You value companies and you say, okay, so let's take an example of Reliance, right? Let's put some dummy numbers out there. The market value of Reliance is 2,000 rupees, okay? Imagine. But then as a result of your industry analysis and company analysis and valuation, you arrive at what you call a fair value of 2,500 rupees, what we call an intrinsic value, same as fair value. This is what Reliance stock is actually worth, but it's trading at 2,000. So it's a buy, which means you would advise someone to buy it, right? Now, I've just described three levels of CFA in 2 minutes to you, Vishaka. So so you have to excuse my brevity, but that's what you do. It's quite technical, and fair values can differ. So Abhijit can have one fair value for Reliance, and I can have another fair value for Reliance on the same day, the same time, simply because we have different assumptions that go into the fair valuation model. So there is no black or white here. There's no right or wrong. It's simply, okay, do you have reasonable justification for your assumptions, like revenue growth rate or expense growth rate or gross margins or net profit margins or capex trends? Do you have good enough basis, which normally you get by looking at the history of the company and by discussing with management and competition. That's pretty much in a nutshell what you do in fundamental analysis, right? That is the second question that you had, Vishaka. The first question was, how do you deal with people being risk averse? It's difficult to actually change because historically in India, people have invested in gold and real estate. That's what, because they're tangible, right? You can touch and feel it, and they're liquid. You can sell it, and all those, and you can live in a house and can use your gold for jewelries and all those things, right? Whereas stocks and bonds and financial assets are intangible. You can't touch or feel them, right? You don't even have the stock certificate issued these days. Everything's electronic. So I think that's one big issue, but it's changing a lot. For the last 10 years, what they call the financialization of the Indian markets has happened, which is that a greater percentage of household wealth is being invested in the stock market. It is nowhere close to what it is in the US or Canada or Australia or UK, but it's slowly increasing because I think people are now more confident and they don't think the stock market is a scam anymore, like what it was, say, 30, 40, 50 years ago. There's still insider trading going on. There's still market manipulation going on. That happens in whether it's India or Hong Kong or or London or New York. But it's far more transparent and far more regulated. So I think people are now more confident of investing in the Indian stock market, especially now that they have a lot more fund managers out there. There are a lot more people professionally managing money and controlled and watched by the government. So many factors have led to this financialization of the Indian economy. I think it's a good trend. And I think it can only get better with more financial inclusion, as tier 2, tier 3 cities, women and all those people get into finance and investing. Does that answer your question, Vishaka?
Yes, sir. Sure. Thank you so much.
Pleasure.
So there's a question from Nidhi. So she asked, should I go for IB if I want a margin of creativity in my job? And does investment banking believe in work-life balance?
Right. Two questions here. Investment banking and creativity, and investment banking and work-life balance. Let me answer the second question. That's easy, right? There's not much work-life balance in investment banking, right? Although it depends a bit also on what you define by work-life balance. If you're looking for 9 to 5 and a 2-day weekend, you can forget that in investment banking, right? It's like I said, it is stressful, it's deadline driven, it's client driven. And if you don't do it, someone else will do it. And if you don't keep up pace, you'll be out. So that's how most big investment banks work. There might be exceptions here and there, right? The first question you had, Nidhi, about creativity in investment banking, depends again what you define by creativity, right? Yeah, to a certain extent, you can be creative in structuring a deal, like a merger and acquisition deal. You can be creative and say, okay, this we can do, or we shouldn't do this, or we should try out this new innovative financing technique, try this new method of going public, for example. So there is a certain element of creativity involved there, which brings me to another topic, Nidhi, which is financial engineering. I don't know whether you heard that term. Probably not, because it's a strange mix of two different worlds, right? Finance and engineering. So financial engineering is where you get into the technical aspect of a deal and you actually come out with a product that has not been done before, using your knowledge of finance, asset classes, maths, and statistics. So that's a bit technical. It's not covered in CFA or most MBA programs. So that creativity comes, we attend a master's in finance program, for example, from say London Business School. They go into depth into that kind of things. So yeah, so that is one kind of creativity you have. You can do that, structuring a deal, either through the method I mentioned or even other ways. And that's pretty much it. But otherwise, there's not much scope for discovering your creative side there. Does that answer your question, Nidhi?
Yes, sir. Thank you.
Brilliant. The last but not the least, right? I want to talk about employability. So, and this is very important topic for me. I'm very passionate about that because over the last, 29 years of my career, I've been through many careers, right? Corporate life, entrepreneurship, freelance, market analyst, speaker, etc., etc. And at every point, I've seen that employability is a big issue. What do I mean by that? You don't become employable just because you have the right experience or qualifications or education or even aptitude. And that is something that's missing. And I want to tell you guys, because you're going to go into the workplace very soon. And employability is something that you should be. You should be employable, right? And not just employable, but highly employable by the best companies. So again, going back to some research done, there's a big gap here. And this guy you see on the right side is trying to close a gap, what I call the employability gap. Basically, on the left side are employers waiting for the right candidate. On the right side are candidates who are struggling to meet what the employers need. And the employers don't just need an MBA or a CFA or a CA. They want someone who can hit the ground running tomorrow and deliver the results for the company. That's it, right? Doesn't matter what your fancy degree is. So I've done some research on this. CFA Institute has done some research, and they've concluded that for the investment professional of the future, someone in investment management, the most difficult skills to find are generally soft skills, followed by what you call T-shaped skills, domain knowledge and a combination of technical knowledge, leadership skills, and then only technical skills. So you see, technical skills come right at the bottom in terms of difficulty to find. The easiest to find are technical skills, right? What has happened is the asset management industry has been undertraining in the non-technical areas, soft skills, right? And because of this hyper specialization, artificial intelligence, big data, machine learning, you're having fewer and fewer generalists who have soft skills, and you're having very technically oriented people, right? So that is dangerous because if you don't have soft skills, you have some major issues, right? So I was, again, going through some CFE Institute and some other research publications over the last few months, and they found out a few important skills and aptitudes that you must have for success in investment management, which by extrapolation, you can cover a lot of finance, by the way, as well. Okay. Does anyone want to guess what those skills and aptitudes are? You can post your answer in the chat box. If you want to become a good equity analyst or a good investment banker or a good bond analyst or a good portfolio manager, what do you think should be the top, say, 5 skills and aptitudes you need to have?
As you can put it in chat. So
yeah, you can put in the chat. Yeah.
Skill of reading graphs, analytical skills, Excel,
right.
And understanding statements, presentation.
Right.
Excel again. Okay.
Maybe I should jump in here, Abhijit, and say, what about the attitudes? Not just the skills. What attitude do you think you need to have?
Communication, persuasion
right.
of clients. We
right.
have, sir.
Yeah.
Right. Anyone else with the attitude? Dedication, attention to detail, future forecasting.
Right.
Yes, sir.
Cool. So I can't see the answers, so I'm going to rely on you, Abhijit, for reading it out to me.
So persistence, people skills. We have a lot of.
Yeah, I like the people skills answer. Someone also mentioned communication earlier, right?
Yes, sir.
So this is what I'm going to show the list to you. This is based on research. What they found out are the most important skills, aptitudes, and attitudes required for success in investment management specifically. But like I said, it's applicable in many domains in finance. So hard skills we talked about, right, earlier: analytical ability, broad knowledge, and ability to reason. I talked about that in the earlier slides. Aptitude is out-of-the-box thinking and a lot of interest in financial markets. Both are important. Out-of-the-box thinking is what Nidhi said earlier, creativity, right? What do you bring to the table that no other analyst or fund manager or CIO can bring to the table, right? How are you going to manage my portfolio differently? What is the difference between ICICI, HDFC, and IDBI or Reliance in terms of managing my money, right? They must have something different, right? What is the difference between private banker A and private banker B? Right? That is what you call out-of-the-box thinking, right? And there are quite a few differences if you think about it, right, that you can come up with. The second aptitude is high interest in financial markets. What does that mean? So let me ask another question. How many of you actually right now invest in stock markets, even a small amount? You can post your answer in the chat box.
Yes, sir.
Abhijit, you need to give me a count.
So 7 people have already said yes, me, and some are raising hand as well. So
right.
I can see some hands as well.
Okay. So I think we have eight participants, yeah. Right?
Yes, sir. 8 participants have raised their hands, and some have written in the chat as well.
Okay. So let's assume, say, out of 55 participants, say about 15, right? So about say about 25% have invested, which is good. I strongly urge you to invest, even if it's paper trading, mock trading, invest in financial market, invest in stocks. Just get to know the industries and the companies, and making money and even losing a little bit of money is fine. You learn a lot that way, trust me. Okay, that comes on the heading of aptitude. And the final list, which is not the least, is soft skills, right? Communication, humility, collaboration, and personal effectiveness, right? Let's talk about the first one, communication, right? Now, everyone assumes, it's a common assumption, by the way, assumes that communication basically means just talking. That's not true. If you look at the left side of this slide, right, you see listening, presenting, influencing, negotiating, what else? Facilitating channels, and cultural awareness. Just look at the huge list of skills that comes under communication, right? It's not just one way presenting, it's much more than that. That's one area where you need to build your soft skills going forward, right? Humility, now that's straightforward, right? Because you know that you can't control the markets. And because you know that a lot of your success is based on luck and not skill, and it's very important to know the difference between the two. And because employers look for people with confidence, but not arrogance, and because you should be able to admit your mistakes or revise your opinions, humility becomes important. And it's very easy to come out of MBA, IIM, engineering, and say, you know what, I'm smart, I'm accomplished, I'm well-educated. You might well be, but you're not experienced, and you need to have some experience to be humble. Like I said, I have lost money, I've made money, so I respect the markets. I don't think that my money making, due to any huge skill. I think a lot of luck is involved. Markets go up, I make money. Markets go down, I lose money. So that is something you need to cultivate as well, right? Going forward. Collaboration. One thing I've noticed, even when I was doing my studies and my career, sometimes we're not very good at collaborating, right? Can anyone tell me what collaboration means in one word? Just describe collaboration in one word, another word. What does collaboration result in?
Teamwork is the answer that I'm
Okay,
seeing its
good one.
answer.
Anything else?
I would say
any other words that you can think of related to collaboration? Teamwork, I agree completely, 100%.
Synergy, productivity, alliance.
Right.
Synergy again, yes, sir.
Right. So yeah, so absolutely, teamwork completely, right? So the keywords that come to mind is brainstorming and discussions. Trust is absolutely important. Working in teams, we talked about that. Delegation. A lot of people don't know how to delegate. They either over delegate or under delegate, and they end up becoming micromanagers, which people hate, right? You don't want to be someone who's managing somebody all the time. You don't want somebody looking over your shoulder all the time. That's not good, right? Ability to accept criticism, analyze without blaming, and give credit where it is due. The last bit is on personal effectiveness, right? This is basically managing your time and being self-motivated. This becomes very important if you're working on your own and there's a lot of pressure and stress and you have multiple tasks to handle. It becomes very important to be effective personally. I experienced that when I was working in the Big Four. I had no prior experience with the Big Four. I was working in India. Then I went to work in Oman with KPMG. And my God, it was hell for the first 9 months because I wasn't used to working in this very efficient, fast-paced, deadline-driven, very demanding environment. I wasn't. So I found that I was spending too much time. I was not completing my work. I was getting criticized by my bosses very badly. So I learned the hard way, right? But this is something that you probably learn in MBA college, maybe by doing projects, etc., but also at work. So please try and pick up this kind of skills as well, right? Going forward. And of course, ending on this, I'll give you 10 skills which I learned, they're not from any book. And the most important skill is probably the last one, know yourself. But I'll go through this very quickly, right? Number one, okay? If you don't ask, you don't get, okay? Promotions, rewards, recognition, no one's going to come and give it to you on a platter. You got to ask for it. Like they're saying in India, right? Only the crying baby gets the milk. So don't expect people to come to your corner and give you something. Don't say that, my work speaks for itself. And going to happen. Number two, manage your career. Don't outsource your career to your boss, your HR manager, or your parents, or your spouse. Okay? It's your career. It's your future. It's your livelihood. Actively manage it. Like I said, you actively manage investments, not passively. Actively manage your career, which means you must be always networking, learning, updating yourself. Okay. Number three, get feedback and work on it from your bosses. Don't take it personally. Ask for it actively and genuinely work on it. No one is perfect. And just because you do MBA doesn't mean you're perfect. There'll be lots of flaws. I had them. You'll have them as well. And it's a journey that you do towards excellence. You will never get excellent. That's fine. Number four, technical skills, very important when you enter a job. But for growth, people skills are more important. I learned that the hard way. I always thought technical skills were fantastic, right? CA, CFA, blah, blah, blah. But then after a particular point, people like people hire people promote people, right? They're not promoting an MBA. They're not promoting a CA or a CFA. If you can't get along with other people, then they don't want you. Number 5, treat people not like you want to be treated, but that like they want to be treated. Very big difference, right? I've heard this a lot of the time in LinkedIn and social media. Treat people like they want to be treated. No, because each person is different. Okay, Abhijit is not the same as Nidhi, is not the same as Vishakha, is not the same as Ajinkya. They have very different values, behaviors, skills, strengths, IQ, EQ, everything. So how can you treat them all the same way? And definitely not like yourself, right? Number 6, your network is your net worth. Okay? So in MBA school, you learn that a lot, which is fantastic, right? Right from the moment you join, you work together, you have projects, you have case studies, right? You have events like this that you organize. Do that all the time. Because trust me, in my case, I got my best jobs, my best advice, my best money-making tips because of my network. And everything I've done since then, if I look back, is because of my network, right? Number 7, don't jump just for money, brand, or title, right? Especially when you're young and you just got out of a big school, you want to go for the big brands, a lot of money, you look at CTC, how many lakhs do I make per month and what title is it? And that's all fine. I went through the same phase as well in my career initially. But after a while, that excitement fades off. And then you start thinking more about, okay, what makes me happy? Where can I really employ my skills? Where am I with good people? Which culture am I working with? What is the kind of company culture I want to work with? Right? Number 8, always go above and beyond, okay? The call of duty, and stand out. Just imagine, right? You all guys graduating from IIM, Raipur. There are quite a few IIMs in India. They're all people graduating every year. How do you stand out? How is A different from B, different from D? Think about that, right? My case, again, I think, grew a lot in my career because I always did something extraordinary wherever I worked. I never wanted to be average or be part of the crowd. And could be a different project or a different kind of report or whatever. Something else always came up. Right? Number 9, life is not going to be fair. Career is not fair either. So don't expect you to be picked up, promoted, recognized, rewarded, patted on the back. Okay, it may not happen. If it happens, fantastic. Okay, I hope it happens for you. I'm being optimistic, but also realistic here, right? And I've faced that. A lot of people face this issue. It's something beyond your control. Don't get bitter. Don't get cynical. Just deal with it. Be mentally tough and resilient and move on. And the last, number 10, which is actually the most important point, is know yourself, right? A lot of us are not self-aware, but we can be self-aware. We know what our values are. We should know what our strengths are and what we are good at, what we're not good at. And then suddenly life becomes much more easier. In my case, it's taken me a lot of time to get where I am today in terms of self-awareness, but life has become much more focused and simple and clearer because I know what I will do. I know what I will not do. I know what works for me, what makes me happy, what doesn't make me happy in the long term, I mean. Okay. You will find that eventually, I don't expect you to, suddenly get nirvana overnight, but keep working on it and you'll just become more and more self-aware and you'll start feeling the difference as well with time. Trust me, you'll start feeling the difference. A few more tips before I leave. Finance books, try this 4 books out. Fantastic books on finance. The first is on markets by a billionaire hedge fund owner, Howard Marks. The second is by the guru of valuation, Ashwath Damodaran, who teaches at NYU Stern School of Business in New York. The third book is on quant investing, which the engineers would love. And it's a focus on probably the most successful hedge fund manager in the world, Jim Simons of the Renaissance Fund. And the fourth book is a very new book by Ishwar Prasad on the future of money. So if you're interested in cryptocurrencies and central bank digital currencies and blockchains and digital revolution, it's a big book, about 400 pages, but I've read it. It's worth reading. A lot of insights. Yeah. If you want to read about, so these are my go-to blog spots, podcasts, and online resources whenever I want to learn more about markets and finance. So Ashwath Damodaran's Blogspot is the first one, the guy I talked about. He's brilliant. I think every 2 weeks he writes a new blog. He wrote about Paytm about a month ago. Recently, he wrote about CEO and CEO pay. About 2 months ago, he wrote about ESG and sustainable investing. Brilliant, absolutely stunning blog spots. Meb Faber's podcast is also very good. He talks to key figures in finance. Morningstar has a podcast called The Long View. Again, CFH Institute has a podcast called Take 15. Barron's and Seeking Alpha, the bottom two, are excellent financial markets websites. These are premium websites. They're not for free. So you've got to pay something like $20 per month or something. Seeking Alpha also has a free element to it. Barron's is not free. Both are US based. But if you're really serious about finance, please track these blogs, podcasts, and websites. Not all of them, you pick and choose, but this, from my experience of the last many years, this works. Of course, like I said, I want to talk about careers as well. So career books, these are the 4 books I found most insightful about careers. They are authentic, they're very real, they're comprehensive, no bullshit, and written by experts, right? Tim Ferriss is a famous podcaster. And the book on the extreme right, actually, is quite hilarious. It's written by 2 ex-investment bankers about 20 years ago about their, what you call, incredible life as investment bankers on Wall Street. It's very raw, but very funny as well. And you might either say no to investment banking or yes to investment banking after reading it, right? So it's funny, but true. It's like liar's poker. Now, I have got a website and a podcast that has been focused on careers, like Abhijit mentioned at the beginning. It's called The Real Finance Mentor. It's a mix of blogs and webinars and podcasts. And I bring out an episode every month talking to someone who is in finance, investment banking or asset management, right? So check out the website, www.therealfinancementor.com. I also blog regularly on LinkedIn, probably daily, on matters related to careers and employability. So I have a very, very, very focused theme, right? Careers, employability, upskilling, education, things like that. I don't stray out of my chosen lane, right? And journeys, there are 2 guys whose podcast interviews that I did that you might find interesting, because both are Indians and both have done the MBAs, one from IIM Indore, Vaibhav. Both are computer engineers and both worked in investment banking. One in HSBC in UK because he did his MBA from the US. Second guy with Deutsche Bank in Australia, who's also a CFH holder, Vaibhav. So check out their podcast on my website. Just go to therealfinancementor.com. This is about 1 hour long, but lots of insights about their engineering journey, their MBA journey, how they got into investment banking, how they left investment banking and what they thought about it and things like that. So pretty interesting. And that's the end of my spiel. Probably took longer than expected, Abhijit, but I hope that's not a problem. We still have about probably 10 minutes
Yes, we
for
still
the
have 10
session.
minutes.
We still have 10 minutes, so that's fantastic. So yeah, so the floor is now open to questions.
We have a couple of big questions
Okay, right.
to start off.
Okay.
So actually, we'll the quiz that we planned, maybe we'll have it after the Q&A so that
Sure.
we can complete this in time.
Sure.
So the first question is about investment banking. So the question is, in investment banking, we have 2 offices, front, which is client facing, and then the middle office. Usually one starts their career from the middle office. So until one reaches front office, how to keep oneself motivated and when we can't see the fruits of effort firsthand?
Yeah, I know what you mean. Who is asking the question?
So this question is by Mayank Agarwal.
Okay. So Mayank, it's quite frustrating because I see that even in among my CFA students as well, right? You work in back office or front middle office, and it's very difficult to get to front office. How do you keep motivated? Well, I think you need to keep yourself updated about what's happening at the front office as an industry and in your company as well, right? Very important to have that updation going on, right? The other thing is that, if you don't, a couple of choices. If you don't get into front office where you are right now, then you can consider what you call a lateral move, Mayank, right? A lateral adjacent move to another place where you can get into the front office, given that you already have experience in the middle office. They might take you, depends on the company, right? So that's one way of doing it there. Another way is in going to a smaller firm than where you are right now, which might consider your risk management or middle office experience, and they might take you into a more client-facing role, right? Smaller clients, smaller company, maybe even smaller pay, but something that's worth considering. So this are all moves that you can keep you motivated, right, as to how to move. And very importantly, Mayank, while you are at your firm, where you are now, whoever it is in middle office now, keep your networks going, right? Build your networks. Because I know people who worked in, say, credit risk, right? Which is not really front office. And then they moved into investment banking front office in the same company on Wall Street. This is a Deshi guy, right? And he did that because he connected with so many people on LinkedIn, in the company, outside, asking, how do I move to front office? What should I do? Give me some advice. What should I learn? Whom should I meet? And would you ever consider me? And if not, why not? So that's my best piece of advice for you. So it has been done. It is difficult to move into front office, but with the right connections, if you build the right connections and you have the right attitude and the skills, it should be possible. Does that answer your question, Mayank?
Yes, sir.
If it doesn't, don't hesitate, tell me. Yeah.
No, sir.
Cool.
Thank you, sir.
Pleasure.
Sir, I'll take forward with further questions. I guess Aptitudes is not available. Some internet
Okay.
issues are there.
Okay.
So the next question is from Sanchit. So he is asking that valuation is partly science and partly art. And in today's world, we are seeing automation and AI participating everywhere. So we can assume that in here also, AI will play a major role. So where can we find a balance in this in the future? Like putting in so much effort and knowing that sooner or later it can be replaced by, these automated intelligence.
Yeah. Sorry, who asked the question, Vishaka?
Sanchit.
Sanchit. Great question, Sanchit, because it's something that's close to my heart as a CFA charter holder and as an investor, right? So you are right. Valuation is an art, also a science. There's a process. There are formulae you use. But here's the exciting part, right, Sanchit? Like I said, two people can value the same company and arrive at different fair values, right? And one of them might be more right than the other, or one of them may be less wrong than the other. So what's the trick here? The trick is that the art side that you mentioned, right? That cannot be easily automated away. The science, yes. The process, yes. But the art, no. What do I mean by that? So let me give you an example, right? So in CFA, we have this theory called the mosaic theory. The mosaic theory is basically when you piece together information from lots of sources to form a beautiful mosaic. You know what a mosaic is, right? It has a beautiful picture, which no one else can do. But you can do because you're very diligent and you knew how to ask the right questions to the right people at the right time. So if you are, for example, a pharma analyst, you would look at pharma competition, pharma industry, you go attend pharma regulatory hearings, you would get information from various sources. So because of your diligence and your hard work and your ability to see the big picture, which other analysts may not have, you are a superior analyst, and that's an art. Of course, all what you discover will go into your model, but the other part that you just did, very few people can replicate that. So I think machines still have a long way to go before they replace humans in valuation. I strongly believe in that. And that's why I believe that if you're a great analyst, no one can beat you. No machine can beat you, because machines lack the what do you call the judgmental ability. They lack the vision to actually come up with a great valuation or a great theme or a great thesis, which is how I think you should look at it as well. Does it answer your question, Sanchit?
Yes, Sanchit has commented on the chat box.
Brilliant.
Okay. So there was one more question about how to maximize the opportunity that we get on our internships. We only have 2 months, and how to maximize those 2 months.
Yes, very practical question. Who is asking this?
This was asked by Neha.
Neha, right? Very practical question, Neha. How to maximize, like ROI, how to get maximum return on your, not investment, but your internship, right? ROI. So I think in 2 months, you can't do too much work, but this is what you could do. what you should do is listen and learn a lot. Don't try and criticize them because you don't know enough to criticize anybody in the firm. So keep your opinions to yourself. Listen and absorb information like a sponge. If you ever give an opinion, give it in private in a discreet way. Number one. Number two is go above and beyond the call of duty. If they ask you to do the most menial work, do it. Okay, admin work, do it. Even if it's photocopying, do it. Okay, because that's what really attracts people. Wow, this guy is, or this lady is from MBA, done the MBA from IIM, and they will do this. That means, they really are very humble people who can grow a lot in their career. So number two is stand out. Number three, build a network. So don't just put your head down, work. So Deshis have this practice of being too hardworking and too diligent. Don't do that. Okay. Network. What do I mean? In lunch break or coffee breaks, you have talk to people from other departments, talk to bosses in other departments, bump into them, say, hi, this is what I'm doing. My name is Neha, and I'm interested in this. Don't go asking for a job. Don't go asking for a role. Do not do that, right? Be discreet, but keep connected. And then one day after the internship, you send an email or you meet somebody, they will remember you, right? Because of what you said or did during the brief interaction, okay? So I think three things I would say. One is, listen and learn a lot. Second, stand out in whichever way possible. Third would be network like crazy, but don't network too obviously that you're desperate for a job and I'm looking only for a job. Network because you like to connect with somebody and you have shared interests. That's what proper networking is, right? And then, suddenly things would happen and they might think about you as well. Make sense, Neha?
Yes, sir. Thank you, sir.
Good question. I like the question.
So there's a question from your fellow Keralite and
Right.
Ronnie and
Is it Ronnie?
yes.
Why isn't Ronnie asking the question himself? Why is he using you as intermediary?
Yes, sir. Ronnie, you can ask. So I
Yeah, I
think
was having certain internet issues. So if I'm audible, you might be aware that the Fed is raising interest next year. So there's a recession that is being forecasted by many economists in the year to 2023, at least in the USA. So as an MBA graduate, should I be worried about job prospects in 2023, or should I look to get a pre-placement offer in the next year?
Man, Ronnie, you're looking 2 years out, man. That is very long forecast. But jokes apart, I don't believe there's a recession in being forecasted. I think growth will slow in the US and rest of the world, which is normal after this huge post-pandemic explosion in growth. I think no one is forecasting a recession. It will normalize, which means growth will be normal. Equities will continue to grow. Economies will continue to grow. Investment bank firms will continue to grow and continue to hire. So I don't think, unless of course some other pandemic comes along that no one expected, right? Who knows? Or some other black swan event comes. But as we stand today, the Fed is expected to raise rates and inflation might go up. But hopefully they don't kill the economy by raising the rates too much. That's the only small risk we have. Otherwise, there's no reason to expect or fear in recession in the US. And because the US is so huge and has impact on other countries, I don't expect a recession because of that in India. There might be some India-specific issues that might induce a recession, although I can't think of any now. But yeah, so I think that's my forecast. But like all forecasts, I could be terribly wrong as well.
Sure. So I hope everyone has been having a really exciting some minutes that we had with Binod sir, and I feel that I have never really learned about investment banking and asset management as much as I have learned today. Like how sir has explained all the pros and cons that we have if we take for any of these choices, be it investment banking or asset management, or simply being in the equity research analyst field. So thank you so much for today for briefing us about the various careers in finance, the pros and cons, and being so, what should I say, like in a conversation manner so that we can feel free and ask our questions and whatever we have in our mind. Also, we got to know that career is important, but self-grooming is more important than that. How can we change our attitude, which is more focused on our corporate world? Like we feel that in corporate world, it is mostly about formalities and discipline. But other than that, our attitude, our positive attitude towards our work and the cordial attitude with our colleagues. Everything matters in work. So even if in some time we would become successful MBAs, but still that attitude and self-grooming needs to start now. And so we are really thankful to you for joining us today in such a short notice, and then, answering each and every question that we had. And so if you'd like to say some last words on that.
Thank you, Vishaka, for the very kind words and for that very neat and comprehensive summary of what is a pretty long session. I'm quite happy that everyone enjoyed and were informed and probably inspired by the presentation as well. And especially on the employability and soft skills side, which is so important and sometimes so often underrated as well, right? Thank you so much for the FinTalk 5.0 and the Finance Club of IIM Raipur. I think it's a great initiative that you're doing by reaching out to experts and industry practitioners like myself to come and present their thoughts. And thank you for all the participants. We had fantastic participation, not just in terms of quantity, but also quality in terms of questions. Thank you for all your questions as well. Some very good questions, which was very happy to listen to and also happy to answer. And I really hope that you would use this information to develop yourself further. And I'll be very happy to talk to you after you get your first placement. Reach out to me or as you progress in your career. We'll be very happy to keep in touch as well. You can connect with me on LinkedIn. Unfortunately, there's a LinkedIn limit, so you can't connect as such. You can follow me. But if you want to reach out to me, this is my email address, binod.shankar@gmail.com. And I'll try and answer as quickly as possible. And I will also share my presentation with the organizing committee, the slide deck after this talk, so that and they can probably share with you by email, so you can have a record of it as well. And that's pretty much it. So thank you so much to the organizers. Thanks so much for the audience. Great participation, and very happy to see youngsters so keen about employability and careers in finance, and wish you all the best. Thank you so much.
So before we end, there's another thing. So as a gesture of gratification, the Fanatics team from IIM Raipur would like to present to you a memento, which will be sent to you at your address as soon as possible. And so I would like to say to everyone over here that we have personally had a conversation with sir, and I can assure you that I have never seen a person who gels up so well with everyone and answer any kind of question that you have. So even if we are ending today, this event, you can reach out to sir via LinkedIn and ask any kind of doubts you have, be it regarding your careers or be it anything. So yeah, sir is really helpful in that.
Thank you so much, Vishaka, for the kind words. Guys, I did not pay Vishaka to say these kind words about me. It is
Definitely not.
It's a volunteer. Thank you so much, Vishaka.
Thank you so much, sir.
People are also thanking in chat.
Thank you. Thank you so much. So much for listening. I really hope you found it insightful and inspirational. If you did enjoy this episode, please drop us a review and spread the word. And be sure to check out more exclusive content on therealfinancementor.com and my LinkedIn profile, which is Binod Shankar CFA. Let's keep in